now at 3,800 an ounce gold. We're a gold company with our own mill. We're almost ready to start producing gold as soon as early 2026. We believe we will get over 1 million ounces.
Hey everybody, welcome back. My next guest is Kal Malhi. He's the chairman of Lafleur Minerals, Inc., trading on the CSE under the symbol LFLR and trading in the United States under the symbol LFLRF. Kal, welcome.
Thank you, James. Thanks for taking the time.
You bet, Kal. Saw a press release today, some high-grade hits from underground. Tell us about the project that you're working on and what the significance of those drill results would be.
And James, as you know, when we acquired the Swanson project in a bankruptcy a couple of years ago from Monarch, we have a resource that's located on a mining lease, which we're planning to start mining using our Beacon mill. We started drilling outside of the known deposit to see if we can expand. And these results are the first 5 holes out of, I think we have 30 holes that are in for assays. So these are encouraging results. They're step-out holes away from the Swanson deposit, but they're encouraging that we could possibly extend the Swanson deposit as well as some of the other claims, Bartek and Joland, that we added on to Swanson.
Yeah, so you've got this mill that's basically... It would cost close to $100 million to replace everything, including the tailings dam, and do all the permitting again. And you've got the Swanson deposit, these other claims that are close to it. So is the game plan then to put a resource together that's going to feed the mill continuously? And when do you think that'll start?
James, we acquired the Beacon mill, which was upgraded in 2022 with about $20 million in upgrade. Monarch put it into production at a time when gold was $1,600 an ounce, and it was marginally economic at that price. And Monarch had a lot of debt, and they couldn't raise money because the gold market was dead, the junior market was dead, and they went into bankruptcy where we acquired the assets. So since we acquired the assets, the mill is a very high state of readiness to restart. And we're going to restart the mill to produce gold at 4,000 US an ounce now, which is an easy layup for being economic. And then the next thing is we have our Swanson deposit, which is about 50 kilometers away from the mill. And that deposit is located on a mining lease. And the importance of a mining lease versus a mining claim is mining leases are very easy to permit. It's almost like a permitted mine site. So we can extract ore from the Swanson mining lease, feed the Beacon mill, and our goal is to start the mill and start producing gold as soon as early 2026.
Wow, that's fantastic. So this is in Val-d'Or, Quebec, correct?
Yes, Val-d'Or, Quebec. Our mill is about 20 minutes outside of the town of Quebec or Val-d'Or. So our staff can drive home every night or after every shift. The access to labor, Val-d'Or has always been one of the best mining towns in North America, I would say. And infrastructure there, like I said, you can drive our mine. The Beacon mill is right off the highway. Our Swanson deposit is accessible. The infrastructure is all in place.
Mm-hmm. Okay, so then in terms of Lafleur, the bigger picture, is all the upside going to come from these claims that you have? Are you planning to add more claims? Are you looking for joint venture partners? What is the game plan for expanding production?
So, James, we acquired the Swanson project. It was always a second or third child. It was about 5,000 hectares, 200,000 ounces. Since we acquired it, we've expanded it by acquiring ground from Abcourt Mines, from Glovac, and the project is now 18,000 hectares, 180 square kilometers, with about 50 very high priority targets. So with Lafleur, what you have is an operating mill that's about 800 tons per day, which will start producing. Then we have our Swanson project, which we believe we will get over 1 million ounces by our aggressive drilling, which we've got underway. And once we're producing, we believe we can use our equity to acquire ounces around the mill, either through M&A or other transactions. And our goal is to acquire 3 to 5 million or build our own ounces around the mill, and then upgrade the mill to about 3,000 to 5,000 tons per day and be about 100 to 150,000 ounce gold producer in Val-d'Or.
Sure. So in terms of what's there now to start in 2026, you've got ore ready to go into the mill from the Swanson deposit, or is there ore present from the previous operator?
There is some ore present from when Monarch last operated, but then we also have access to up to 500,000 tons from Swanson as well. And that's all pretty well permitted. Where we are now is to restart the mill and And we have a PEA that we're completing hopefully by the end of October, which will outline exactly what the economics are to produce ounces of gold now from our Swanson deposit. And that's our short-term goal. Obviously, our next goal is to start producing in early 2026.
So what kind of grades are we talking?
At Swanson is currently about 2 to 2.5 grams per ton. But James, what's come about in the last few years is ore sorting technologies where you can sort the ore to minimize the waste. And, our target is 5 to 6 grams per ton is what we'll be shipping from Swanson after the ore sorting is done.
Right. Okay, so you've got 30 holes that have been assayed, results forthcoming. What is the drill program after that look like in terms of size and scale?
I think we want to continue to expand and outline resources at Swanson. But the other thing is at Beacon, we also have about 10 mining claims that have historically shown potential and have some historical resources. So we will be working to outline ounces right at the mill itself, where we have 10 claims that surround the mill.
Okay. And what is the permitting regime like in Quebec?
Val-d'Or is an amazing town where we're located. It's it's a mine town, and permitting is about the best there is in Canada.
Yeah. Isn't Val-d'Or actually perched on an open pit mine in part of the town?
Yes, it is. I mean, if you drive into Val-d'Or, you can't drive more than 10 minutes without hitting some form of a mine infrastructure there.
Right. So there's got to be a lot of companies in this gold price environment trying to develop resources who don't have a mill.
Well, James, I think the price of gold has changed the model, right? Before, the junior mining model was, let's go find some ounces in the ground, put them into a 43-101, and then hope for a major to come in and buy us out and put up the capex to start producing. And now with the price of gold, it's changed. If you have some ounces in the ground, how quickly can you turn them into dollars, right? To do that, you need a mill. We have an updated mill. It's in the heart of a gold belt. If someone wanted to start to produce ounces and build their own mill now, what we have at our mill, the replacement cost we had assessed at is about $50 million for the build, but permitting alone would be another $20 million, and the time frame would be 3 to 4 years if you wanted to build a mill now.
Wow. Okay, so that's puts you in a very sort of competitive position in terms of attracting toll milling opportunities from other developers.
And we're kind of a unique junior gold exploration play, James. I mean, there's junior gold companies that have ounces in the ground. Some are even more grassroots where they have, some drills turning. But we're a gold company with our own mill, which has a permitted tailings pond next to it, and we have our own deposit. So we're a gold company on 3 different fronts. And on top of that, we're in the best world-wide mining jurisdiction in Val-d'Or, Quebec.
Sure. So I guess at some point, given the history of small gold mines and exploration, your plan would be to fund exploration from the revenue of the gold mill.
Yes, definitely. And James, the amazing part is Val-d'Or, we're drilling there right now. Our cost to drill is about $80 a meter. And to put that into comparison, there's obviously some amazing discoveries in northern Canada and the Yukon. But in the Yukon or even remote Quebec, they're having to fly in helicopters. They're having to build camps. And the cost of drilling a meter is $500 to $700 per meter. So where we are in Val-d'Or, we can drill at $80 a meter. If we've got infrastructure all around us, we're not remote. We're in the heart of a gold mining town where staffing is not going to be an issue. We're not going to be building infrastructure. Infrastructure is already there. So everything is set. We're almost kind of ready to restart. As I said, the mill last operated at 1,600 an ounce gold. We're now at 3,800 an ounce gold. And the economics are obvious as to where we can go with this.
You bet. All right, Kal, we're going to leave it there for now. We'll come back to you soon. Thanks very much for joining me today.
Okay, thank you, James. Thanks for taking the time.